Let's talk about some of the major bank failures, their impact and the reasons for those bank failures. So to begin with, three important bank failures have been heard in last 1 week. Those are the most important Signature Bank, followed by Silicon Valley Bank and the recent First Republic Bank. If we go on to history, the Credit Suisse, which is a European Union bank known for providing loans to numerous fraud agencies as well, is one of the 12th biggest banks in India, but has a contribution of only 0.01% in the banking assets in India, and therefore India is not at risk with the problems being faced by Credit Suisse. So that's one of the things that we have discussed. Now, to check this Credit Suisse, Switzerland, the Central Bank of Switzerland has given nearly 54 billions as a lifeline, and this the Saudi National Bank from Saudi Arabia is considered as one of the biggest investors with 10% share in the Credit Suisse, right? So that is one thing about it. Coming on to next is the Signature Bank. Now, Signature Bank is a New York-based financial institution, and this was crucial for cryptocurrency investors. So cryptocurrency was the main aspect through which this bank was involved, and there has been a recent resolution that has been seen with Signature Bank. The next is Silicon Valley Bank. Silicon Valley Bank had been involved mainly with tech startups as well as life sciences startups, right? Now, these startups have been seeing this tech startup industries have been seeing biggest number of layoffs, and the depositors overnight in matter of hours withdrew nearly $40 million from the bank, which led to the second biggest failure in the history of United States after Washington Mutual that happened in 2008. So after the bank failure of Washington Mutual that happened in 2008, Silicon Valley Bank failure is considered as the second biggest in US history. Now, FDIC, that is Federal Deposit Insurance Corporation, insures only up to $250,000 of the individual account. For a married joint account, it is $5,000. Now, this is the only amount that is insured by the Federal Deposit Insurance Corporation. However, this Silicon Valley Bank had its branches across the globe. For example, in UK, it was taken by HSBC overnight in $1. So definitely it survived there. Now, the thing that is very important to understand with this bank failure is the reason. This Silicon Valley Bank spent a lot of its investments on zero interest bonds by the government. Now, zero interest rate bonds by the government. Now, the zero interest rate by the government, actually inflation took place. So, it was actually no more a zero interest rate. So, interest rate increased. As a result, the bank, we can say the value of the bond, okay, the bond value declined, and it eroded away the money that the candidates or the investors had in. Also, the people who are banking, the closest associates of Silicon Valley, did not trust the bank and withdrew their money overnight. And as we saw, there was a withdrawal of $40 million in matter of few hours. The next recent one is the First Republic Bank. Now, First Republic Bank is a San Francisco based company. Signature Bank is a US based company, is a New York based company. Silicon Valley Bank is taken by the Silicon Valley Financials, SVB Financials. Now, First Republic Bank, which was established in 1985, is known for wealth management. Again, part of one of the 11 major banks of United States. However, this bank was able to survive because numerous other banks came in to help survive this bank. But within 1 week, the prices have dropped by 60% for the First Republic Bank. Bank also received nearly $70 billion in an emergency loan from which companies? From JPMorgan Chase and Federal Reserve. So if we look on to what help that First Republic Bank got was from JPMorgan, Bank of America, Citigroup, Wells Fargo, and they put in $5 billion in the uninsured deposits. Morgan Stanley, Goldman Sachs deposited $2.5 billion each. Then BNY Mellon, State Street, PNC Bank, Truist and US Bank put in $1 billion contribution. So that was the contribution done by various other banks because this was one of the banks that they wanted to actually rescue. The scene that was seen with the Silicon Valley Bank was drastically poor because the venture capitalists and the startups who were one of the closest business people with the bank actually withdrew, and therefore the signs of trouble were deep. In India, as we know, the banking system is relatively strong, and to have that, Basel III norms are implemented. Now, Basel III norms on the banking system make sure that the bank maintains the liquidity coverage ratio, which was missing in the case of Silicon Valley Bank. And that was one of the reasons for the failures of the Silicon Valley Bank. Also, the Credit Suisse, which was another bank from European Union, as we have seen, a lot of investors had the loss of the money because this was a bank which was having a list of dark records, money laundering from a Bulgarian cocaine trafficking gang. Similarly, there were Bermuda court orders for the damages for the local life insurance company and so on. So there are numerous dark records for it. If we look onto the list of bank failures, as we can see, Washington Mutual was the biggest one in 2008 with the asset at the time of failure at around $307 billion. The second biggest is Silicon Valley from California in 2023 with a deposit of $2009 billion at the time of failure, the assets. Now, besides this, Continental Illinois, First Republic, that was again seen in 1988, IndyMac, American Savings, who are some of the biggest banks, and then some small banks, the list of which is given here. Now, Silicon Valley Bank in 2022 was considered as the 16th biggest bank and with an asset of nearly $209 billion at the time of failure and a deposit of $175 billion. This was a very important bank. The Washington Mutual had an assets of $307 billion and a deposit of $188 billion by the depositors. Now, prior to this, there was also failure which was important, which was the Continental Illinois Bank, and this was even before the Washington Mutual. So, Continental Illinois Bank failed even before the Washington Mutual. Besides this, as we said, there are numerous other banks which have failed, the list of which we have already cited here. Now, the parent company of Silicon Valley Bank is the Silicon Valley Bank Financials. Now, it is working with investment banks, Centerview Partners and law firm Sullivan and Cornwell to actually find buyers for its assets. Now, what have been some of the major causes? The first major cause we can cite is the poor risk management choice. The second important one was the bond price actually failed, which reduced, which eroded away the money of the investors in the Silicon Valley Bank. And this was one of the major reasons. Also, there were numerous big deposits from the startups, and they were actually collateral loans or invested, those that invested excessive funds, right? On the other hand, what is important, or what is the lesson that we can learn? The most important lesson that we can learn is that bank needs to remain conservative in terms of lending. So they should not lend openly. They should have good collaterals and assets against the lending. And that is one of the things that would make it more viable and strong. If we look onto the scenario of European Union, the banking sector has improved significantly. The mitigating potential for the spillover effects of the Silicon Valley Bank failure is relatively less. Now, if we talk about the non-performing loans in the European Union, they have declined to less than 3% of the loan book. Also, a lot of lessons have been learned by the European Union banks After the the Euro sovereign debt crisis, this has made sure that the supervision and the regulatory framework are more stringent. So among the Basel norm members, Basel III norms, most of the countries belong to European Union, and also single resolution fund is the first and the foremost important mechanism that looks into the European Union, which makes it sure that the banking structure of European Union is more robust and more sturdy as compared to the United States, where we are seeing a huge segment of bank failure. But despite of this, this topic becomes extremely important for your upcoming prelims examination for UPSC. Bank failures, bank insurance, Basel III norms. We have covered a series of video for next coming 3 days on it. Make sure you don't miss any of those, and the detailed practice for your prelims and mains are available in the link below. Have a wonderful day ahead.